Today, the Fed signals more rate hikes and the Dow drops. Hello again, I'm Martin North from Digital Finance Analytics. This is a quick heads up on the news overnight that the Fed lifted rates as most expected. The market reaction was, also predictable, down and down, particularly in the US, as the tone of the release suggested that the Fed is less dovish than many were anticipating. So we look at the comments and the market reaction. And by the way, if you value the content we produce, please do consider joining our Patreon program. Here is the link. Or make a donation via PayPal. Again, here is the link, so that we can continue to make great content. The Board of Governors of the Federal Reserve System voted unanimously to raise the interest rate paid on required and excess reserve balances to 2.40%, effective from December the 20th, 2018. In their statement, they said that information received since their November meeting was that the labour market had continued to strengthen and that economic activity has been rising at a strong rate. Job gains have been strong on average in recent months, and the unemployment rate has remained low. Household spending has continued to grow strongly, while growth of business fixed investments has moderated from its rapid pace earlier in the year. On a 12-month basis, both overall inflation and inflation for items other than food and energy remain near 2%. Indicators of longer-term inflation expectations are little changed on balance. So the committee judged that some further gradual increases in the target range for the federal funds rate will be consistent with sustained expansion of economic activity, strong labour market conditions, and inflation near the committee's symmetric 2% objective over the medium term. Well, the markets did not like that, with the Dow slumping following the announcement in the light of the less dovish outlook on tightening than many had expected. The Dow Jones Industrial Average fell 1.49% to close at 23,324. The S&P 500 dropped 1.54% to 2,507, with the next level of technical support actually at around 2,300. While the Nasdaq Composite slipped 2.17% to end at 6,637. The S&P 500 Financials fell 1.25% to end at 389.98. And the volatility index, the VIX, was still in worried territory, ending at 25.51, down just 0.27% on the day. Fear still stalks the halls. And in fact, a sea of red swept across Wall Street on fears that the Fed could overshoot on policy, even as the central bank cut its outlook on rate hikes in 2019 amid expectations for a slower pace of growth and inflation. All the major indices were sharply higher just before the Fed announcement. The Fed actually reduced its 2019 median forecast of interest rates to 2.9% from a previous estimate of 3.1%, hinting at 2 rate hikes in 2019. That's below the 3 rate hikes previously indicated in the Fed's September projections. And in the aftermath of the Fed statement, analysts said that the Fed projections on a range of measures, including economic growth, inflation, and unemployment, were not as dovish as expected. The accompanying materials were somewhat surprising and not nearly as dovish as we'd expected, Morgan Stanley said in a note to their clients. But Morgan Stanley added that with the target range for the federal funds rate now within the range of estimates of the neutral policy rate, the Fed must tread more carefully as it contemplates further rate hikes. Well, the 3-month bond rate moved up 0.97% to 2.407, whilst the 10-year bond rate dropped 2.16% to 2.762, suggesting that a yield curve inversion might be on the cards later, and that would be a leading indicator of a potential recession down the track. selling was exacerbated by a slump in tech, led by a plunge of 7.25% in Facebook, down to 133.25, following reports that DC Attorney General Karl Racine filed a claim against the social media company for farming out its users' data to Cambridge Analytica. Energy stocks remained on the back foot, even as US oil prices clawed back some of their losses from Tuesday, despite data from the Energy Information Administration showing a smaller than expected draw on crude supplies. The crude oil futures was up 1.67%, but it is still at a remarkably low price of $47.38. Gold fell 0.55% to $1,247, and Bitcoin moved up just a little, 4.4%, to $3,823, but still way off its highs of around $20,000 earlier in the year. So overall, the level of uncertainty continues, and this suggests the volatility will continue into the new year. Now the question becomes, how far down and how fast? As always, if you like what you've seen here today, please share and like the post and add a comment or question. I do read them all. And if you want to join the growing band of subscribers who receive alerts when we release new posts, do subscribe now by hitting the subscribe bell. And if you have already subscribed, many thanks. I really appreciate your support and participation. I'm Martin North, the Principal Analyst at Digital Finance Analytics. Many thanks for watching, and I'll see you next time.